Okay, welcome to subunit 4.4 from Module 4. What I'd like to do right now is summarize some key components from Module 4 for you as they pertain to the CLEP final exam. Okay, right now what I'd like to do is start out talking about cash flow analysis. Okay. Cash flow analysis, the movement of cash back and forth, is utilized obviously for financial reporting. Now, this seems like common sense, but there's a big precursor. Cash itself, whether you're accounting or investigating or even doing business, cash is the hardest currency or transactional product to track. So we have to be extra careful. Now, anything we do regarding analyzing the flow of cash because of regulations that apply to financial reporting all apply to a financial statement, right? And that's the cash flow statement. You may see that again. Okay, now cash flow analysis exhibits a starting balance. Now, here we have the cash flow statement, right? And let's say our starting balance is $60,000. Okay. Later on in that cash flow statement, after accounting and cash expenses, mind you, in this specific financial period, and whatever period that is. Okay? We need to know where the cash came from originally. Okay? Customers, investments, things like that. All right? And now we need to know where it went during the period. Okay? So we use cash to pay some debts. And we also used cash to store some away. Okay? Now, that's huge. We need to know where it went at all times. And like I said, it's the hardest to track. So we have a separate financial statement to perform analysis on, and that would be the cash flow statement. Okay? The cash, where it comes and goes, will appear at the bottom of the cash flow worksheet. Okay? Okay? The key there is for anything that we have or paying out or saving, we need to monitor interest occurring. Because even interest applies to cash. Okay? Now, the cash flow statement displays cash flow from 3 different areas. You're going to see this again, so this is pretty important. Okay? We're to call it cash flow from operations. Okay? All operational activity uses some type of currency, cash included, right? Investing activities. Now, depending on a type of business, as discussed previously, businesses invest in all different types of activity. Sometimes they use cash for it. Okay? So cash flow, investing activity. And lastly, we need to actually conduct business. How do we do that? Financing activity. Okay? Now, the cash flow statement is comprised, okay, of two different components. Okay? Net cash, okay, otherwise known as what we just mentioned, financial activity. And its concluding balance, which is titled cash, end of period. Okay, now, there's a formula used in this analysis, and the key is, as you look at the formula in its verbal format without using numbers, it really shows how a balance must be displayed at the end. All financial statements are used because we need to keep a balance, whether it's a balance sheet or anything else. We need to show equal credits and equal debits, all right? We can never get away from that philosophy. So this formula that I'm going to break down for you that you will probably need to use, wink, wink, on the final exam for CLEP, will allow you to articulate it as you observe it and say, oh yeah, I can see the balance in and of itself. And then when you plug and play with numbers, it will do the same. So here we go. Okay? So here's the formula. Okay. We take cash from operations. We'll call that CO. Okay? We add that to CIA. What do you think that is? Cash from investing activities. Okay? Then what do you think we're going to do? We're actually going to add that to another number. Take a guess. Cash from financing activity. The answer to that additional equation, okay, will equal, and real quick, remember, cash from financial activities is always your net cash flow. How you stay above water, remember that. So you take these three numbers, you add them together, and make sure you recognize where you can locate them on the balance, on the cash flow statement. Okay? That number must equal the following. The total change in cash plus a number called cash. And mind you, this is all broken down for you on the cash flow statement. Okay, we're going to add that to a number, cash beginning period. Okay? We take those two numbers, we add those together, and that will then equal cash end of period. So let's take a step back, evaluate that, make sure there's a balance there. Here we go. Cash from operations plus cash from investing activities plus cash from financial activities, which is net cash flow, will and should equal total change in cash plus cash at the beginning of the period, right? And that will then equal cash end of period. You can't go wrong if you're keeping track of all these components of where the cash is actually going to and where it's coming from, as mentioned. Okay, so for an exam question, let me ask you this. The financial statement that includes classifications for operations, financing, and investing activities of all business entities for a period of time, because we don't know if it's a year, is called A, the income statement, B, the statement of retained earnings, C, the balance sheet, D, the statement of changes of owner's equity, or E, the statement of cash flow. Well, we just got done talking about the cash flow statement. So it is E, the statement of cash flow. Although we use net income from the income statement and we use information from the balance sheet, even maybe changes in owner's equity off of that statement of changes of owner's equity, the key financial statement that we need to use, okay, for the period that we're talking about, that includes, remember, operations, investment activity, and financial activity is 100% cash flow statement. And as they say, cash is king.